Good afternoon. My name is Saboma Wakama. Welcome to Empower Your Money and the Dot Money brand. I am the founder of Empower Your Money and the Dot Money brand. This afternoon, I want to quickly talk to you about the different types of credit cards we have, the different types of credit cards we have. Some of you may be wondering, well, I want to apply for a credit card. I know I need one, but what types of credit cards are there? And then how can I pick, or what should I be looking for if I wanted to pick a credit card? And so I want to walk you through several types of credit cards that are available, and you can choose based on those available credit cards and the information we provided to you in our last video on how to pick the right credit card for you. You would be set to pick the right credit card for you. And so I'm going to start today with the standard credit card. The standard credit card is the standard card that most credit users, especially people with fair credit rating, apply for and are typically approved for. A standard credit card may not be high on rewards, may not even have an application renewal fee or card renewal fee, which is an annual fee, but it does is standard, and it's typically what most people use. The other type of credit card would be a balance transfer card. Balance transfer card is a card that is specifically used with a strategy to transfer your balance from one card to this new card. What are the benefits of that? When you open a balance transfer card, you may have a whole session, you may have a period of no interest period, sometimes up to 18 months, no interest period. And so this is a good opportunity for people with high balance to transfer the balance from one card to another, sometimes saving up to thousands of dollars. Let's take an example. So if you owe $5,000 on one credit card, and you have an APR on that credit card for 20%. 20% of $5,000 is $1,000. So you're expected to pay $1,000 interest in 1 year. Well, if you transfer that $5,000 credit balance onto a new credit card for that has no transfer fees, even though they do sometimes the minimal, but let's assume they have no transfer fee, and you transfer $5,000 credit onto the new credit card, and they give you a period of 18 months, no interest period. What you would have done is you would have saved yourself $1,000 over the next 1 year. Or even more, considering that you may not have to pay that up to the 18th month before you start being charged for credit for the interest accumulated. And so this is a strategic way for people who want to manage debt to transfer credit from one debt from one card to another. And so this is a specific credit card that you want to consider depending on your use case. The third type of credit card out there is what I call the reward credit card. This reward credit card is geared towards optimizing and maximizing reward. Some people pick different types of credit cards based on whether or not they're interested in points, reward points, whether or not they're interested in cashback, or whether or not they're interested in travel miles. For some cards are connected with, traveling companies, the airlines, and you get points or you get cash back for every trip you make and every mile you travel in the air. And some you have particular cash back so that you can spend for other merchandise. Some you can get actual cash that you can withdraw or send into your bank account. And so rewards credit card is a unique type of credit card that you want to see, you want to check. Typically, reward credit cards are good, but typically you pay an annual fee. And when you're paying an annual fee for those really good credit cards, reward credit cards, your annual fee can be as high as $250. And so if you're not traveling a lot or you're not spending a lot on the credit card, this might not be a good kind of credit card for you to pursue. Another type of credit card are student credit cards. These are easy for students to get because the terms are geared towards students. You typically have a lower balance. You typically have a lower limit on your card. And so students are encouraged to use this to learn how to use credit responsibly. So student credit cards are a type of credit card that are mostly given to students. And so this is something that you have to check, or you need to look at if you are a student. Another type of credit card is the secured credit card. Secured credit card is geared towards those people who are building their credit or rebuilding their credit. Essentially what it is you go to a credit card company, mostly a bank, and you offer a security deposit for the amount on the card. So you give them your money up front, they issue you the credit card, and then you use it as though you're using the credit card. The thing to remember here is this: you have a security deposit on the card on the amount that you approved for. And so as you responsibly use the card, you're gonna have the monies returned to you that you offered as a security deposit, and then your credit limit increased as you go. This can range anywhere from 6 months to 18 months, but it's at the discretion of the bank or the financial institution giving you this loan or issuing you the credit card. And so the next type of credit card I want to talk about is charge cards. Charge cards are unique in the sense that you literally are expected to pay off every balance on the card monthly, so, or whatever billing cycle you have. You're not expected to have a balance outside of the billing circle. And the good thing about this is they do give very good bonus points, they do give good rewards, but it is not very advisable if you are not if your income is not, if you're not sure that you're able to pay off your balance by the end of the month. So it is geared for a specific kind of use. That is what charge cards are used for. Another type of credit card I want to talk about are subprime cards. Subprime credit cards, they're for people who typically have bad credit and are trying to recover their credit. They're not the best. The rates are typically unfriendly. The APRs are not the best. And so I would advise that you stay clear of those. There's also limited purpose credit cards. Limited purpose credit cards are for specific locations. So specific companies, say grocery stores or gas stations, they give you a credit card that you can buy produce or merchandise from them and then pay off in a specified period of time. This is good for people who are rebuilding credit because it restricts where they can use the credit. And so you want to check that if you travel a lot. Even when you have established credit, if you travel a lot and you're on the road a lot, you buy gas a lot, it would be good if you can open a credit card for yourself at one of the gas stations so that you can get rewards. First of all, the gas you buy at the discounted rate, and then you get rewards for every point that you spend. And so these are cards that you want to check. If you're a builder, a homeowner, you want to check credit cards from some of the major home stores, Lowe's and Home Depot and all of that. If you have a large family, you may need a lot of groceries. You want to check all of those. So these are specific credit cards that are restricted to what you can use it. And the last credit card I want to talk about here is a business credit card. Business credit cards are geared for small business owners. It will help you run your business, put purchase for your merchandise on the card, and then you pay off as soon as you can. And so these are some of the types of credit cards that I want you to look at depending on your use case. Now, let me paint a picture. Let us assume that you are a student or we just graduated and you got your first job. You got your first job out of college and you were thinking of what card to get, what kind of card to start looking at first so that you can build your credit if you don't have established credit. Well, I would advise that if you're in this situation that you consider getting yourself a gas card, especially if you have a job and you're traveling to your job or to your workplace. Then you would need to put gas in your car, and this would help restrict where you can spend your credit card, and then it will help you build a culture of just spending and paying back within the billing circle. Another thing you can consider doing is getting yourself a secure credit card. I mentioned earlier on, secure credit cards are for people who are trying to build or establish a credit profile or a credit trend. And what they do is they secure the credit card that is offered to them with a security deposit. And so these are two cards that you want to consider getting. So for more information, those of you who want to follow us, you can follow us on Instagram, you can follow us on YouTube, you can follow us on Facebook. You can email us at empoweryourmoneynow@gmail.com, empoweryourmoneynow@gmail.com. I look forward to connecting with you guys again. Until then, have a wonderful day. Have a good one.